The next page we're going to spend some time talking about are liabilities. As you might expect, those come right after assets. So this is page 3, and here again we're talking about statutory accounting rules and presentation, not GAAP. Now you're going to see a little bit different structure in some of these pages. Page 3 has 2 columns. Column 1 is the current year presentation, and column 2 is the prior year presentation. And as I mentioned in the asset section for page 2, the comparative is a required part of the financial statements, and it's very beneficial and useful for people who are not in accounting when they start reviewing these financial statements. Line 1, losses, that's simply the case reserves or each file that a company has known to them, and they set up a reserve to eventually pay a claim on that file. That's represented on line 1, as you can see. And column 1 is the current year, column 2 is the prior year loss reserve. The next line we're going to talk a little bit about is line 3, and that's loss adjustment expenses. If you are settling claims through your claims department and you're using defense attorneys and you're using other third service providers out there to settle these claims, that's going to show up as a reserve with the case file or the actual claim itself. It's the cost to settle that claim. Next, what you're going to see on line 4 is commissions payable, contingent commissions, and other similar charges. And line 5 are other expenses. Line 6, taxes, licenses, and fees. These are basically the payables associated with the operations of the company. And so once you get your primary business taken care of, which are settling claims and losses, and the ability to adjust and pay those claims, now you're talking about the payables associated with, we've got to pay commissions on the business that we're producing, we've got other underwriting expenses, we may have payables associated with those, and then of course any liability associated with taxes, whether it's federal, state, local, whatever the case may be. Next on the liabilities page, we're going to talk about the unearned premium reserve. And here, that is simply the measure for an insurance company of all of the premium they would have to return if the policy were canceled. And so there's a reserve as a payable on the liabilities page that represents what the company would actually have to return if policies are canceled. That's the unearned premium. It's a fairly significant number in most cases because in statutory accounting principles, you're recognizing the written premium, but you have to earn it incrementally over the life of the policy. So you always have a large unearned premium number out there on the liability section of the balance sheet. Let's talk a little bit about something I mentioned on the asset side was a receivable from parents, affiliates, subsidiaries. This is the counterpart. You may notice that under payables to parents, subsidiaries, and affiliates, there's a balance represented on the liability side. Normally those might be netted against one another, the receivable and the payable, but you might want to take a close look on the liabilities page. If there is a payable, you might want to know what that represents. If it's payables for commissions to a related managing general agency that the company has an agreement with, that information is good to know. And once again, when you're looking at it from an examination perspective or an audit, that's one of the things that they'll be looking at. Line 35 of the liabilities section, page 3, shows you the unassigned surplus, and that is simply the retained earnings or the cumulative impact of the company's operations, whether they've been profitable or unprofitable, since they started doing business.